Good morning and a warm welcome. Sage here for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some of the key highlights and happenings from Friday, starting with the US market. And the world equities markets reached new heights on Friday after a session-long climb, booking a week of solid gains following a strong US jobs report. The MSCI's gauge of stocks across the globe gained 0.17%. And the benchmark US indices closed at their record highs on Friday, November 5th, pulled up by the investors' optimism due to the positive economic data. The US job growth rebounded in the last month after a slowdown in summer, and the S&P 500 was up 0.37%. The Dow Jones Industrial Average increased by 0.56%, the Nasdaq Composite Index rose 0.20%, and the small cap Russell 2000 was up 1.44%. Fresh data released by the Labor Department on Friday showed that the US had added 531,000 jobs in October, topping the economists' estimates. And meanwhile, a survey by the Wall Street Journal showed that the economists were expecting the number to be 450,000 in October. The better-than-anticipated growth in the last month is likely due to the subsided cases of the COVID-19 over the summer, while indicating that the US economic recovery has started to regain its momentum in the fourth quarter. The upbeat earnings and better-than-expected outlooks have so far lifted traders' confidence, fueling gains in the market, shrugging off concerns over inflation, supply chain disruptions and labour shortages. The energy, communication services and consumer discretionary sectors were the top gainers on the S&P 500 on Friday, and 10 of the 11 critical sectors of the S&P 500 index stayed in green, with the healthcare sector as the bottom mover. And now we've reached the time for a small break, but do stay tuned as I'll be back with the UK and Australian market updates.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV.
Welcome back. Sage here. You're watching the Global Markets Roundup show by Kalkine TV. European equities wrapped up another week of gains on Friday, led by advances in the travel stocks after a positive update from the US drug maker Pfizer on its pill for COVID-19 and amid the persistent optimism about the earnings season. The Pan-European Stock 600 ended flat but clocked 1.7% in weekly gains, its fifth consecutive week in the green. Following a market-wide burying, London equities extended the winning streak, with the benchmark FTSE 100 trading over 7,300 for most part of the day. The market index registered a fresh 20-month high, up 0.7% from the previous close. However, the index surrendered gains partly in the terminal deals. At 3:30 GMT, the headline index was trading 0.38% higher. Now, barring the heavyweight shares of AstraZeneca, the top 7 stocks by market capitalisation oscillated in the positive territory, with shares of HSBC Holdings, Royal Dutch Shell, BP and the British American Tobacco rising more than 1%. The mid-cap index FTSE 250 traded in a largely similar manner, with the barometer adding 0.50%. Japanese shares ended lower on Friday, weighed down by uncertainties about the outlook of the domestic firms, while gains in technology stocks tracking an overnight Nasdaq rally limited the losses. And the Nikkei share average dropped 0.61% after inching up 0.15% earlier in the session to track the solid finish of the US major indexes. The broader topics lost 0.69%. And the China stocks closed lower on Friday, dragged down by the coal miners amid China's intensive measures to rein in coal prices and boost production, while property firms dropped after a developer said its unit had missed a payment on a wealth management product. And the blue chip CSI 300 index fell 0.5%, while the Shanghai Composite Index lost 1%. The South Korean shares logged a third weekly decline on Friday, even as Wall Street continued to rally as the growing inflationary risks and hiccups in the global supply chain dented the risk appetite. The benchmark Kospi closed down 10.47%. And the Australian share market may open higher on the first day of the week after Wall Street closed at record levels on Friday on the strong US jobs report and positive sentiment surrounding corporate earnings. The ASX 200 added 0.4% on Friday. And let us now look at the commodities market, starting with the bond yields and dollar. The US government bonds rallied after a better than expected jobs report Friday, sending the yield on the benchmark 10-year Treasury note below 1.5% for the first time in about a month. The Australian and New Zealand dollars were ending a turbulent week with a stiff loss on Friday, while bonds enjoyed a much-needed relief rally after the Bank of England defied pressures for a rate hike. The Aussie dollar was huddled at $0.7384, having shed 1.8% on the week so far after repeatedly failing to clear the 200-day moving average at $0.7552. And the Kiwi dollar was off 1.1% for the week at $0.7093 following a bearish breach of its 200-day moving average at $0.71. Oil prices fall, and the crude prices settled higher on Friday after the OPEC rejected the US request to boost its output, and the Brent crude advanced $2.20 US to end at $82.74 per barrel. The US West Texas Intermediate crude rose $2.46 US to reach $81.27. And gold inches higher. The gold prices rise following the Fed's dovish comments on the interest rates. Gold futures surged 1.3%. Let's now take a look at some of those newsmakers. And Cedar Woods Properties announced acquisition of 86-hectare site in Eglinton, Perth, for 49.5 million Australian dollars. Sydney Airport has agreed to a takeover bid from an IFM-led consortium, and Cenex Energy has received an improved non-binding takeover bid from POSCO International of $4.60 Australian per share. BHP has inked an agreement to divest its 80% interest in BHP Mitsui Coal. And thank you for your company on the report. But that's all for now. Do keep watching Kalkine TV for more of the market updates. This is Sage signing off for now.